Friday. Wall Street notching its fourth straight week of wins, however. The Dow is up 117 points, while there was a little bit of a mix in the other two indices. Michael Lee, strategy founder Michael Lee, joins us now. Always great to have you. And the big question, Mike, is, we've come a long way pretty quickly with these markets, but many out there are saying we're going to head into a Santa Claus rally, and it's still not too late to get in, although that feels difficult for people. What do you think?
Yeah, look, when you have a market rally like this, you normally see continued strength, especially into the end of the year. You have fund managers trying to bid up stocks to collect their performance bonuses, and a lot of Christmas bonuses, a lot of liquidity coming into people right now at this point. So when you have this much strength, it tends to continue, especially when there's not super bearish or super bullish sentiment. So no one's really excited about that rally, which is it's a little bit counterintuitive, but that points to more strength into the end of this year.
So, Mike, I want to follow up on that and dig a little bit deeper because, of course, everyone's been talking about the Magnificent Seven, and what, 3/4 of the S&P 500 gains have come from that. So is that where you're going to see most of this rally driven by? I mean, normally in that bearish economic market, you see folks flock to more traditional sectors like healthcare, energy. But is this rally, if it does happen, going to be driven by those big tech names?
We'll see. I think this year has been a really interesting year because you have declining economic conditions, contracting liquidity, rising interest rates. And what's interesting is that these big names in the Magnificent Seven, I don't know if I'd call them recession-proof business models, but very economic resilient. They have the cleanest balance sheets, the easiest access to capital. So it really does make sense that a lot of the money is flowing into these big names and they are driving the overall market. And you were sort of in a situation where you're in the S&P. Yes, the S&P 7 versus the S&P 493. So I think these big winners continue to win.
Hey, Mike. Okay, so I love talking to you because on the one hand, you've got sort of a bearish outlook on economic policy in America, but you still think people can make money. You've got some names that you want us to look at as we go into year end. What are those names?
Yeah, so the first is Truist, and it's a regional bank that's never quite recovered from the Silicon Valley mess of early in the spring. The stock's trading at about 8 times earnings. It's got a 6.5 PE. It's trading at 0.7 book value, where the historical book value is about a 1.1 to a 1.3, somewhere in there. And the PE multiple, you're somewhere around an 11 or 12 on a historical basis. So that's about 50% upside when the market views these regional banks a little bit more favorably, and you've got a 6.5% dividend while you wait. The other name is General Electric. This is just what's old is new, and this is a cost-cutting business transformation story that I think a lot of people didn't believe, including myself, would happen. Next year is going to be an awesome year for them. They're going to spin out their healthcare division and continue to focus on their industrial base. And then you have this AI trade, and so I love Nvidia. It's an unbelievable story. And when you look on your screen, it looks like it's trading at 110 times earnings. That's just wrong. It hasn't really reflected what next year is going to look like. Next year, they're going to do 100 billion in revenue, and they're going to earn about 50 billion in net earnings. So stock's trading somewhere between 20 and 25 times. The problem is they have too much of the market. So as companies look to diversify who they're going to buy tech from, look at AMD and to a lesser extent, Marvel Technologies. Those are going to be the companies going from 0% or 0.5% market share to 1%, 2%, and 3% market share. And so there's a lot more upside in those stocks, I think, in the short term. But if you want to buy a stock that's going to win in the long run, there's a gold rush in artificial intelligence. And I think AI is selling pickaxes right outside the mountain.
When you say the name General Electric, Mike, I kind of flinch a little bit. I think a lot of people do, given their performance over the last several years. But it's a turnaround story. Maybe there's some upside there. We got to leave it there. Michael Lee, thanks for being with us.